In today's video, we will do a detailed review of one of the popular multi-cap fund, that is Nippon India Multicap Fund. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. You all must be quite familiar with the multi-cap category of mutual funds. As the name suggests, multi-cap, which implies that it can invest in more than one category of funds. That is, it can invest across all categories, that is, large cap, mid cap, and small caps. Earlier, there was no minimum allocation limit for a category, but after the circulation of SEBI dated 11 September 2020, it was made mandatory for funds with multi-cap category to have a minimum allocation of 25% in each category. That is, 25% in large caps, 25% in mid caps, and 25% in small caps. The rest 25% is on the discretion of the fund manager in which category to invest. This recategorization of the fund had an impact on the funds, as most of the funds before the recategorization were large cap heavy, as like flexi cap funds. In the later part of the video, we will also see the effect of this minimum allocation on the performance of the fund. So now let's start with the basic details. Here in the video, we will be taking into consideration data of direct plans only. Firstly, let's look at the AUM, that is total asset under management, which is around 13,500 crores, which is little higher for a multi-cap fund, while the expense ratio is 1.11%. That is also on a higher side as compared to other schemes. The benchmark index, that is the reference against which the scheme is compared, is Nifty 500 Multicap 50-25-25 TRI. Here if you see the composition of Nifty 500, large cap has a weightage of 78%, followed by mid caps with 17% and small caps with 5% only. This is quite disappropriate with the benchmark index of multi-cap fund, where it is 50, 25 and 25 for large caps, mid caps and small caps respectively. This weightage of respective categories in the index should not be mixed with the percentage allocation of each category. So not going into this controversy and leave it to SEBI and fund houses to sort it out, now let's look at the sector-wise allocation. From the graph, it is very clear the fund is heavily invested in finance, which is approximately 25%, followed by services, capital goods, healthcare, technology, construction and chemicals. Finance being a core sector and service and capital goods being an evergreen sector, and quite a good performing large, mid and small size companies form a part of the sectors, and when compared to its benchmark, its allocation is quite different except for healthcare and technology. Now let's look at the top holdings and portfolio allocation. As evident, HDFC Bank, HDFC Limited, ICICI Bank and Axis Bank are the main stocks of the financial sector. The Indian Hotels, EIH and Shoppers Stop are the main stocks of the service sector, whereas Metal India is from the capital goods sector and L&T is from the construction sector. On checking the portfolio allocation, it is evident that the large cap shares form around 43% of the portfolio, whereas mid cap shares form other 34% of the portfolio and rest 23% is allocated to small cap stocks. There are in total 90 stocks in the portfolio, and this type of allocation and strategy provides a good diversification and provide better returns in the long run. Now let's also look at the fund managers. Mr. Sailesh Raj Bhan has been managing the fund since January 2013, that is, since the inception of this fund, and has been joined by Mr. Ashutosh Bhargava in September 2021. In such long-standing association of the fund manager with the same scheme is quite beneficial for the fund and is an added advantage for the fund also. Now let's see how the fund performs on risk parameters. Here we compare the parameters with benchmark index and the category average. First, mean return, that is the average return in a year, which is 23.12, which is higher than both the category average and benchmark. Here, higher the value is better. Second, standard deviation, that is a tool to measure how much the return has deviated away from the mean returns, which in this case is 27.19 and is more than both the benchmark index and the category average. Here, lower the value is better. Third, Sharpe ratio, that is a tool to measure the risk-adjusted return, which is 0.72, which is more than the benchmark index but less than the category average. Here, higher the value is better. Fourth, beta, that is the volatility of the scheme compared to the benchmark, which is 1.12, which is more than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here, it is 1.54, which is again lower than the category average. Here, higher the value is better. Hence, from the above data, it can be concluded that the fund's performance is above average and is not able to generate a better alpha, though it is having a higher standard deviation, that is more volatility. Here one should keep in mind about the disproportion in the benchmark index, which we have seen earlier in the video. So now let's check the trailing returns. On comparing the trailing returns for 7 years, 5 years, 3 years, 1 year and less, it is most of the time able to beat the benchmark index. The category of multicap has been formed after September 2020 only. Hence, category average of 3 years and more is not available. Here, Nippon India Multicap Fund is able to easily outperform the category for the period 1 year and less. Hence, regarding the trailing returns, the fund's performance has been good. Now let's also check the calendar returns for consistency of the performance. On checking the calendar returns for last 8 years, that is from 2014 to 2021, the fund has not been that consistent in performance compared to the index, that is in the year 2014, 2015, 17, 18 and 2021. It had outperformed the index, but for 2016, 19 and 2020, it did not perform well. So we can conclude that the fund is not very consistent in its performance, which is not a good sign for a fund. Now let's also check the calendar returns for this year, that is 2022. On checking the calendar returns for the year 2022, the fund has been constantly outperforming the benchmark and index in the whole calendar year of 2022. If you recall, after September 2020, there has been change in minimum allocation of fund in each category. So as the fund should have minimum 25% allocation in large caps, 25% in mid caps and 25% in small caps. This change have boosted the performance of the fund, which is evident in the graph for the year 2021 and the first 3 quarters of 2022. Now let's also check the rolling returns for 5 years, 3 years and 1 year. Here also the performance of rolling return is okay as compared to the benchmark and has been able to beat benchmark 56% for 5 years period, and for 3 years period it is 48%, and for 1 year period it is again 59%. If you closely observe the fund's performance, it is better after 2022 and is on a improvement path. From the rolling returns, it can be concluded that with longer time horizon, the fund is performing better. Hence, one should have an investment horizon of more than 5 to 7 years. Now let's see the upside and downside capture ratios. The upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here the value is 112, which indicates that the fund outperformed 12% more than the index during the rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 111, which indicates that the fund declined 11% more as compared to the index during the fall period. Here, lower the value is better. The upside ratio is good, but the downside ratio is quite poor, and hence, positive effect of the upside ratio is being neutralized by the poor value of downside ratio. Now let's see the risk return graph. Here on x-axis we have standard deviation, whereas on y-axis we have total returns. It is very evident from the graph that the fund has better total returns value with higher standard deviation as compared to the benchmark index and the category average. which indicates that the fund has been able to generate better returns with higher volatility as compared to both the category and benchmark index. So now coming to the conclusion, what should investors do? Before concluding this video and suggest what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to press the like button and also subscribe to my channel if you have not done till now to watch such interesting videos in future also. So now let's look what investors should do. First, the existing investors. The fund's performance has been above average in long run. But if you see the fund's performance in last 2 years, it is quite good, and hence I feel that existing investors should not worry much and stay invested in the fund. The same can also be seen in the following slides. Second, for the new investors, there are quite less options available in the multi-cap category funds, and as the fund's performance is quite good in last 2 years, one can think of starting a new investment in this fund. If you are keen on having a multi-cap category in your portfolio, here I would emphasize that if you are keen on having a multi-cap category fund, my suggestion for starting investment in this fund is based on the performance of last 2 years, because in September 2020 there has been change in the attribute and the base changes for a multi-cap category. So for a fair evaluation, I feel that data of approximately last 2 years should be considered for this evaluation. To understand this, let's check the rolling returns graph for last 2 years. Here you can see that the performance of Nippon India Multicap Fund is on the top of the chart as compared to its category average and benchmark index, and also when compared to other popular and good performing multicap schemes in this category. Now let's also check the rolling returns graph for last 1 year. Here you can see that the performance of Nippon India Multicap Fund is on the top of the chart as compared to its category average and benchmark index, and also when compared to other popular and good performing multicap schemes in the category like Mahindra Mannu Bandhat Yojana as well as Quant Active Fund. Hence, I feel that this fund can be suggested for new investors who are planning to start investment in multicap category. Here I would re-emphasize that the new investor who are keen on starting an investment in multicap category. I have my own personal bias for not having a multicap fund in my portfolio. I would like to add that presently I do not have this fund in my portfolio and not planning to have Nippon India Multicap Fund in my portfolio later also. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you are not done till now, and also press the like button. To check my older videos, click the attached cards to watch the videos. Thank you.